Welcome to the Seven Figure Leaders podcast. This podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. And there you'll find the link to apply. So today we've got Lewis Casserley, founder and principal of Albatross Lending Group. Welcome, Lewis.
Thank you. We got there in the end. We tried that a few times in the rehearsals.
Lewis, tell us a little bit about what you do and who you do it for.
Okay. Well, firstly, thanks for having me on. Excited to be here. I'm, as you say, Lewis Casserley, founder of or co-founder of Albatross Lending Group. We're a specialist lender. We launched during the pandemic, so literally March 2020. Bit of luck, bit of judgment. Really with an ambition to disrupt the bridging specialist finance world. So bridging really came about post-banking crisis in 2008, where banks tighten up their lending policies, more red tape was introduced, and ultimately banks sort of withdrew themselves from the market in more ways than one. So that created specialist lending, and a lot of specialist lending is unregulated. There's generally a bit of a bad negative stigma around bridging finance. And ultimately, there are a lot of players in it for a lot of the wrong reasons. We know that private lenders can lend on a property, and if the borrower doesn't pay it back, then they can repossess and end up effectively acquiring a property for a percentage of its value. Myself and my business partner are from an FCA regulated background. We are and certainly were young, hungry, aspiring business people wanting to make a difference. It was only by luck that we fell into the lending space. But really the mission was to give more transparency, give more of a treating customers fairly style approach, and ultimately be seen as more of a partner or a business partner to a borrower than simply a big bad lender that's going to come and repossess your asset if you don't reply to our emails or pay your loan back on time. Since then, it's evolved and we're trying to grow and into new markets, but the founding principles were to be a good, honest, reputable lender. Okay.
And so for anyone listening who's not clear on what a bridging loan is or how that works, can you give an example of, an example of a transaction you've done and explain how it's different to a normal lender?
Sure. Bridging finance is a short-term solution for generally commercial borrowers. So standard example would be auction house. You've got a property investor, sticks his hand up, purchases a property, and contractually agrees to complete on that transaction within 28 days. Calls his local bank manager. The hoops you've got to jump through. Realistically, obtaining a mortgage on that property is going to take you 3 months, if at all, because naturally, using the auction example, there might be something wrong with the asset. It might not have a kitchen. It might need a structural report. It might need a variety of things that ultimately make that property unmortgageable. And therefore, auctions generally attract cash buyers. So in that scenario, Mr. Borrower would call Albatross Lending Group and say, I bought this property for X. How much can you lend me? I need to complete the transaction within a matter of a couple of weeks. What do you need? And we go, okay, well, this is what we can offer. It's obviously more expensive than what a bank's going to offer, but it means that you can rely that on the day that you need to complete, you're going to buy that property. And it gets them in the door. It enables them to create transactions and make good deals. And ultimately, it's that opportunity cost period that gets them through the door, and then inevitably they will refinance us onto a cheaper product. So when they look at it over a longer period of time, their blended interest rate is slightly more expensive than the normal, but the opportunities that it creates borrowers are obviously advantageous.
Definitely. So you're basically giving them access to something they otherwise wouldn't have access to, because traditional lenders are going to take far too long to get the loan approved, and so they'd miss the opportunity entirely.
Yeah, if at all. And we do everything from quick purchases. So we even have a 48-hour rescue product. So if a borrower is really up against it in terms of time, they can literally call us on a Wednesday, and we've got case studies to support this. Borrower calls up Wednesday afternoon, needs the money by Friday. It might be to settle a business dispute, avoid a CCJ, avoid getting served notice on a purchase if another lender has ultimately let them down, and we can go in and save the day. Equally, we do a lot of sort of development, refurbishment style work. So we'll work with developers that are enhancing or refurbishing a property. We can provide a loan to help them purchase that asset, but then also support them with their cost of works through lending them additional tranches throughout to get that property to its completed stage, where the banks will then come in and say, okay, we'll lend, or ultimately they sell the property for a profit.
Got it. And so you essentially have access to those lenders. They have relationships with you, and then you deal with the transaction itself and working out, the nitty gritty of the actual individual loan.
That's more of a broker's role. So most of our business comes from mortgage brokers, specialist finance brokers who ultimately work with the end client. We ourselves as Albatross are a principal lender. So we have the funding lines already in place in the background. So we're funded through partially our own funds that we've built up through years of living frugally and trying to retain profits within the business. Partially through private investors, both close friends and people we've met along the way that come in and lend Albatross the money. We subsequently lend it onto the client and obviously make a spread in the middle. But then what's enabled us to scale is our funding lines with both our banks and our hedge funds and the like, which are already there in place and 100% committed. So borrower comes to us, we lend them the money, we then manage the loan throughout, deal with that borrower throughout the term of the loan, and then ultimately we've even got a back office team that will handle the redemption of that loan. So work with that client to make sure that they're in a position to pay that loan back at the end of the term.
I see. So it's quite a different transactional relationship versus, say, a mortgage broker where they're hands off after the deal's been done.
So some are, and that's fair enough. It's us that ultimately bears that risk and has that loan on our book for the duration of its term. But equally, we're heavily reliant on brokers. They are our introducers, and they will introduce the deal to us. A lot of the good ones will work with the client throughout. But because it's such a congested space, you've got a mix of brokers. You've got people that have got their long-lasting relationships with their customers, but then you've also got these online powerhouses that get this immense level of deal flow coming through. They package it up and then sell it on to us. So they're absolutely necessary. We wouldn't have a business without them. But our offering is that of a lender rather than a broker.
Okay, great. And so moving back a bit, so you obviously started the business on your own with your business partner. What are the kind of main challenges that you face? Starting a business can be hard work, as we talked about before. What have you faced along the way?
I would say Jordan, my business partner, and I often say, I'm not sure we could go through it again. We always just wanted to work for ourselves. It was, we wanted to create our own freedom. We wanted to be in control of our own income, etc. And we started lending. Previously, we were stockbrokers, and I won't go too much into that because it's not massively necessary. But we found an opportunity to lend money from literally, we were down the pub having a beer, and we got chatting to someone, and he was doing really well lending money, and we went, yeah, I think we were 21, 22, and we went, let's have a go at that. this guy's rolling in it. And so the next day we went, right, well, how do we start this lending business then? I think we were both in our overdrafts. We were both living at Jordan's parents' house, and we had absolutely no idea how to lend. So that's not really the place to start. I think if I was advising anyone trying to start a business now, either have experience in your have domain experience, or at least have a couple of backers and a bit of grey hair to help you get off the ground. But equally, it was that naivety and optimism that we just kind of jumped into it with 2 feet and ultimately just made it work. We were lucky that we didn't have huge amounts of overheads or a mortgage or family and responsibilities. So Jordan's dad kindly refurbished the garage into an office, and I think we used to pay them 200 quid a year for the electric, and that was about as far as our overheads went, and there was always food on the table at the end of the night. So we didn't have that, and that ultimately allowed us to make mistakes and spend time on the right things rather than chasing the pound note, which can often work against you. In terms of the difficulties for us, age was a massive thing, and particularly for our business, we were launching into a pretty grown-up space. You've got hundreds of thousands, if not millions of pounds at stake on transactions. You've got lawyers, surveyors, borrowers, banks, funding lines, hedge funds, all involved in a deal. And then you've got Jordan and I in our garage in Surrey at 21 with our dummies in our mouths still. And so that came with its huge headwinds. So age and money were the 2 things that really worked against us. And we, as a business and as people, never wanted to take on any debt or give away any equity. So, we're 29 now, we were 21 then, and the inflection point for us was only a couple of years ago when the trajectory really started to kick in. So it took us a long time, based on not wanting to really leverage from the get-go. So to try and answer your question, surround yourself with the best people that you know, and always have the tenacity to just go out and put yourself out your comfort zone and go and speak to that person, or make that phone call, or do that thing. Because what we found is that people want to help. If we've got an idea, we've got a mission, or we've got the hunger, there's people later in life that have either done it or been thereabouts that are up for it and want to help. And if you're professional and you present it properly, then there's so much money out there and available to really press on and grow. So I don't know if that answers your question. It's a bit waffly, but
no, it's very good, and something I can relate to, because obviously I used to work at a big bank, and I started there as a 21-year-old, and even you think, going into work at a big bank, you think you're going to start being effective from the day you start work, and it's not the case at all. People don't take you very seriously for quite a long time. I definitely relate to that. But I think what you're saying to 21-year-old young men going out and starting a business in something sophisticated and regulated, like the business that you're in, is hard work. And so is that what you did to kind of get over that hurdle, is surround yourself with people who know what they're doing, and surround yourself with people who are essentially well connected. Are those the two main things, or what
Yeah,
else?
yeah. I think without sort of trying to blow our own trumpets too much, I think we've always been good at getting the right people involved at the right time, and that particularly right now is bearing fruit. Like our team that we've recruited and still actively trying to build on are fantastic, and that's the real level up and the sort of leader that's going to take us to the next stage. But from the get-go, we knew people from the golf club, we knew people from down the pub, from school, from generally being quite social guys. And by the way, we weren't afraid to pick up the phone, and I think our stockbroking years helped in that regard. 300 phone calls a day of just head down, lock on was quite normal to us, and that definitely helped. So we literally said, right, let's start a lender, blah blah blah. Right, what do we do? Well, first we've got to learn the market. So let's present ourselves as brokers, because lenders like brokers, and then we'll go around the country and we'll speak to all of our potential competitors if we can get this thing off the ground. And everyone loves talking about themselves, so we'll ask them all their secrets and tricks of the trade, and then as a result of that, we'll devise a business plan and take the good and the bad from everyone we've spoken to, and create an offering. At which point we can then go out and try and speak to a couple of investors to see if they like what we've put together and they can chuck a bit of money our way. It's a bit chicken and egg, but that's generally how it would work. And then we go back to our stockbroker hardcore sales days, and we get a list of mortgage brokers and we hammer the phones for 6 months and see if we can get a deal and see if we can match it with the amount of money we've got committed in the background. So as a result of that, we kissed a lot of frogs in terms of who we surrounded ourselves with. And earlier on, we made bad decisions out of desperation and out of a lack of confidence in ourselves as well. Many times we would sit down when the terms of a deal with a certain investor or a certain partner that was coming on worsened, when perhaps they saw an opportunity to take advantage of us. We'd sit down and go, yeah, but we might be giving a bit more equity away, or we might be paying this investor slightly more interest as a result, but we need them. And it was only one day someone went, no, you don't. Just put two fingers up at them and tell them you'll do it on your own, or you'll find someone else. So I think having that confidence in yourself and actually backing yourself in a scenario like that, whilst you might feel like you're staring a gift horse in the mouth, or potentially, putting yourself at risk of going backwards, having that belief and knowing what you want and then not settling for something that you don't want is so important. Because the amount of time we've made agreements and then a year down the line we go, what have we done that for? And we've had to buy people out or get ourselves out of situations. That was a big thing for us.
And you talked about scaling and getting external money. What's next for the business?
What's next for our business? So as mentioned, we founded Albatross with the mission of disrupting. And initially that disruption came from the offering that we had and the service that we were providing. So, and we maintain that to the day. So, every morning we get into the office and we say, what are we here for? Why do brokers call us? Well, it's not because we're the cheapest. It's not because we're the biggest, but it's because they can call us and we'll honestly tell them exactly where we're going to be. And we won't let them down until the money is in the borrower's bank account. So that's something that we will always thrive to achieve and work towards daily. And in terms of scaling, we're not one of these lenders that wants to sit in the boardroom or down the pub or on the golf course and boast about the funding lines that we've got or the loan book that we've managed to grow, because there's a huge vanity and sanity element to our industry and our business. So our focus is, well, if we can focus on being the best lender in the market, then the scale should take care of itself. However, that only works to a certain degree. So Jordan and I have stepped away operationally from the business, and we've got, as I mentioned, we've got a great team now that are that are churning the deals. We've got some fantastic sales guys, as well as back office guys underwriting the transactions. So the deals are coming in, they're getting done, and everyone's happy on on all areas of the transaction. What's now important for us is, well, in order to be the best, we can't do the same as what everyone else is going to do, because really there's no ways to differentiate. It's very difficult as a lender to differentiate your product because you're selling white paint. It's the same money, and generally, whilst we're specialist lenders, a lot of us are funded in exactly the same way from exactly the same banks, or senior to those banks. It's kind of generally the same money, so they all come with the same restrictions. They all come with the same covenants. They're all very, very similar products, similar criteria elements, and ultimately the cost of the capital to us as specialist lenders is very similar. So you look at that and you go, well, how do we differentiate that? And the easy and the obvious answer is, well, let's be cheaper than the others, or let's push ourselves from a risk point of view. So let's lend slightly higher, more aggressive loan to values, or let's do slightly less in the underwriting stage to not get bogged down in questions or valuation reports or whatever. So those two differentiators are a huge risk to the business, because you're cutting your margins and you're increasing your risk. So that's quite unsustainable, and realistically, at some point you're going to fall on your own sword. Not to mention that these big banking lines come with their own operational risk as well, because they need big workforces, they need huge systems and controls and compliance, as well as the fact that you've got to then support that funding line with mezzanine funding, your own cash, equity players coming in, so you're losing control and diluting your shareholding. And the money that you don't lend, generally you're paying for in non-utilization fees. So you're kind of like, well, this is costing me money. I've got all these deals. And you end up conflicting yourself between needing to get the money out the door, but needing to also protect your own risk to make sure you've got business in 12 months' time when all those loans come around for expiry. So that is, if we wanted to really fly off the shelves and catapult Albatross to the forefront of the industry size-wise, I think we're up there in terms of our brand. We've done well from that aspect. But in terms of size, if we wanted to, that's the route we'd go down. But for the reasons I've just mentioned, what we're trying to create is something different to that, where we're not restricted. We ultimately want the relationship with our borrowers and our brokers. We want them to trust and rely that we're making the decision, and we're the principal lender that they can call up. And if we look at a deal with our common sense approach, we'll get that deal done. And it's not, well, the bank want this, and this, so we can't do it. That's not why bridging finance was created. Bridging finance was created because banks don't lend. So now banks are funding bridging lenders. How does that really work? So for us, what we're working on, I'd love to give you more detail, but I can't at this stage, is effectively creating our own funding lines. And the focus on that is to have pure discretion over our capital, so that in effect we're lending our own money and we can make the ultimate decision, which, if you talk about price and risk, we're not really, neither of those are our concern. Our differentiating factor is, well, these other lenders are restricted on their product offering here, and here, because that's what their funding lines want to see. We have the discretion to be able to structure transactions that commercially and from a credit point of view make perfect sense. We're comfortable, we can sleep at night, but equally the borrower is getting what they want. And that's what's driving us at the moment. It's far easier said than done, and there aren't many that do it. But in terms of scaling, that's how we intend to do it. And it's going to take longer, and it's going to take more work, and I'll probably have more grey hairs by the end of it. But that's we're still 29, and we're not looking to sell out anytime soon. So that's our long-term driver is to press on in that regard.
Sounds like you've got a lot of exciting things in the pipeline there, Lewis. So
Hopefully.
for anyone listening, who are you looking to build connections with? Who would help you grow your business, or who can you help with their business?
For us,
Obviously, the people who might be listening who actually want a loan from you, obviously.
sure. Yeah, I mean, look, anyone wanting a loan, as long as you can offer property as security, UK property. We obviously want to grow our loan book and support more borrowers, support more property development. So yeah, please absolutely get in touch if we can help with your borrowing and your lending requirements. We lend anything from 50,000 up to 5 million, and that can be supporting business cash flow. It can, as I say, support buying a property. It can support anything commercially. So absolutely get in touch with me, and I always pride myself and the team alike that will give you a quick yes or no on whether we can help and not waste anyone's time. And then in addition to that, we're always happy to welcome investors on the flip side. So we have a stable of investors that we manage their funds, and we put those monies into loan transactions, and we are still nimble enough that it's very much sort of deal by deal. So like we are on the borrowing side, equally with our investors, we're very transparent. We share all the loan documents, all of the necessary information for ourselves and our investors to make calculated decisions. And actually, I would say that we provide returns that are far disproportionate to the risks attached to them once we've got Joshua, our head of credit, to fully underwrite them. So yeah, always happy to welcome money on board, to assist in loan transactions, and of course, always happy to hear from borrowers with their borrowing needs.
Very good. So it's going to be very easy for people to get in touch with you. Somewhere in the show notes, there'll be a link to your LinkedIn and also to your website. Lewis, thank you so much for coming on the podcast. Wishing Albatross all the best over the next few years as you execute on those growth plans that we talked about.
Thank you, Tom. Appreciate your time.
Thanks for listening. As I mentioned at the beginning of the episode, this podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. On that page, you'll find the link to apply.